Good morning, everyone, and welcome to this morning's London Forex webinar. And thank you for waiting patiently while we sorted ourselves out to get started. So here we are, we're all good to go. But before we do start, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And as always, in this session, we will be looking at the charts through the prism of volume price analysis. As I've had a quick look down to see who's with us today, and I can see we have some of our Forex students, we have some of our quantum users, and I think we've got some new people as well. And really for those of you who have maybe come along for the first time today, volume price analysis, the methodology which looks at the price action and volume to confirm whether the move that we're seeing on the chart is valid or not is all explained in the books that are on Amazon. But as well as looking at the technical picture of the chart, we also look at what's happening on with regard to the fundamental news, and we also look at the related markets. And increasingly these days, we also have to look at the political situation as well. But it's much easier to see all this, how we pull it all together by actually looking at some charts, which we will do so very, very quickly. I mentioned our indicators, our quantum indicators, to help us. We have developed, I mean my husband David, who's sitting behind me, initially we developed these for ourselves, and for Forex, for our Forex trading in particular, what we've done is we have these very, very particular indicators that basically help us identify quickly, in the shortest possible time, in all the time frames, basically where the money is flowing into which, first of all, which currency, individual currency, by virtue of the currency strength indicator. We call it the currency strength indicator, but we take trades when currencies are weak as well. So I suppose you could say it's much more a currency flow indicator, because we want to see where the market, where the money is, into which currency the money is flowing into, and then we then pair that currency in. We put it into what we call a matrix, because the flows into that currency is going to be reflected, obviously, by what's happening in the counterpart currency. So, for example, at the moment we've had some really nice buying in the Aussie dollar, as a reaction to the RBA, but also because markets are generally very positive. The Nasdaq is back over 11,000. Market sentiment is good. Whatever the market thinks maybe is or not reflecting the real economy or what's happening in our lives is neither here nor there. We just watch what is on the chart, and the Aussie, being a risk currency, in other words, it reflects that sentiment. It's bought when the market is in a positive mood and sold when it's in a negative mood. We look at the flows into the Aussie, but also into particular Aussie pairs, such as the Aussie yen. But as I said, we will look at that in more detail when we look at the charts. That's what the matrix tells us. We have the array, which is really an indicator designed to give us an insight into the strength of a particular move in a currency pair. And then finally, we have the currency heat map, which looks at the performance of the pairs in multiple time frames. And in fact, I think we'll look at the currency heat map in a little bit more detail today, because we are, I must admit, we are very remiss, partly because of time constraints. It is a very, very sophisticated indicator and can be used in many different ways. So that's what we are going to be doing today. Obviously, we've got the charts. I've got Ninja 8, but I've also got MT5, which I have here, and the reason I have MT5 is purely because it gives me more choice with time frames. As you can see down here, down the left hand side, MT4 is a great platform. It's based on MT4 anyway, but you are restricted to the time frames that are available on the platform. And also MT5 is much more of a multi-asset platform, so there's hundreds and hundreds of different stocks and all sorts of things that you can trade if your broker offers you MT5. The dashboard that I've got here doesn't have the heat map. I have that on a separate chart. But I've got the hourly chart here for the CSI. I've got here, and in this version in the center here, I've actually got the matrix above it, because I really want to see, as I said, we know we've seen some really good buying in the Aussie, but where is the strongest buying in the currency? And we can see here it's actually against the Aussie Swiss, which also tells us that sentiment is very, very positive at the moment. Right, so that's what on the technical side and what we're going to have a look at very quickly. I'm just going to bring up what's happening today in terms of news. Obviously, being the first of the month, we have had all the PMI data from yesterday. China data came out on Friday, so it was the end of the month and the beginning of the new month. Yesterday, we had the ISM, the US version, that came out, higher than, better than expected. It was over the 50% of the 50 inflection point. Markets overnight have picked up this mood, and the Nikkei is up, I think, over 1%. We have a look at the investing.com, and this is what we suggest all our traders do, is you need to get a flavor of what has been happening, in the previous session. This is a 24-hour market, but it is actually 3 separate sessions. We've had Asia, we have Europe and London, and then we have New York. So each time there is a crossover. Obviously, you have new traders coming in, market sentiment might change. And there's a great example yesterday, actually on a cable, where on the hourly chart you had a sell on cable in the morning, Europe and London, and then as it kept, it was a really, really nice move, and then you'll have a look on the hourly chart. It was a complete about face, driven primarily by the US dollar, but it actually was, as we say in trading, it was great two-way price action. But as you can see here, this is the futures of the Dow. That's there, up 88. The S&P 500 is up 6, and the Nasdaq I've actually put on a separate chart here. Where are we at the moment? That's up as well. I've mentioned a number of times that the key level for the Nasdaq is 11,000. It has peaked over 11,000, but it's very much determined to go higher. Which brings me on to another topic that I just want to mention, because it is obviously the beginning of the month, and this month of August. Now, traditionally, August, because of it's summer here in the Northern Hemisphere, a lot of traders would take summer holidays. Market liquidity tends to be lower than it would be. That can lead to volatility. I'm not sure about this, and markets can be a little bit quiet. I'm really not sure about what August is going to bring, other than I think we are going to get volatility. I don't think liquidity is going to reduce that much, and we simply have to be on our toes a little bit more than we probably would be if this was just a normal summer season, as it were. Seasonality is something that is you will find much written about if you read sites such as Forex Live or other media. Because there are patterns, and patterns repeat. So there's a season for gold, for example. You will often read it's the gold buying season because it's the Indian wedding season. That's always had an impact on gold prices. Equities as well, you may have heard the expression sell in May and go away, but the second part of that quote is come back on St. Leger's Day, which is actually the 8th of September. Now, the reason I'm talking about seasonality, because seasonality is also applied to currencies, to currencies, and the reason I'm mentioning it is it's interesting. Of course, it's interesting. If it's happened 8 times out of the previous 10 years, what is the probability that it may happen again? Well, it is probably quite high, but it is probably. The issue is that it can set up a kind of bias in you, and so that when you're looking at a chart and you're trading that particular instrument, when you look at a chart, that little bias, that little voice in your head will be saying, oh, right, it's the season when I have to sell gold, or I have to buy gold, or for currencies. And you really have to kind of try and keep an open mind about it, which is difficult because we are all driven by our, we are human, and our biases are, sometimes they define us. And in trading, I know for a fact David has a bias to the short side. He has a bias to the short side. Why? Because markets sell off a lot quicker. They sell off faster than they rise. So if you are selling short, you're selling something. The move is likely to be sometimes pretty fast and furious. You just have to be aware of it. Now, is that a weakness? Well, no, not necessarily, because A, you're aware of it, and secondly, you can actually make it to your advantage, work it to your advantage if you keep this open mind. And it's very hard at the moment because you will be reading everywhere, expressions like "this market cannot go any higher." Stocks are so overvalued. Well, yes, they may be, but as old Livermore once said, nothing is too high to buy and nothing is too low to sell. It is very, very difficult. And when it comes at this particular time of the year, as I said, you've got the holidays, you've got maybe lower liquidity, you can have this sort of perfect storm, as it were. And you can see something on a chart and you can see, oh, that's a great trade, and you'll be stopped out and you think, well, I did everything right. And it's because of all these factors. Now, I've also read, quite interestingly, how seasonality can play out, certainly in equities, in as much that fund managers, they have this at the back of their mind. So as soon as they see something that's rolling over, they will sell. So it's a kind of psychological thing. It's almost like a self-fulfilling prophecy. But we really have to just be aware of it. Now, what volume price analysis will do for you is it will throw up all sorts of signals. And if you can read the chart through the prism of VPA, and VPA is, as I said, price action volume, candles, candle patterns, but also support and resistance. What it does, it first of all, it removes that kind of innate bias that we have, and you really just focus on the chart. And what I want to show you is actually, this is the 60-minute chart of cable, which sorry, let's say cable, it was Aussie dollar, which I wrote about yesterday. In fact, let me bring up the version that, where is it? No, I've pulled up the wrong one. It was the Aussie dollar. The Aussie dollar, here we are. This is on the 60-minute chart, and it was just such a good example. If I put the time up here, there we are. So where are we? Where we're at 8 o'clock is the London session. We can see the Aussie dollar was basically trading in a congestion coming up to London. It did actually sell off here, as we can see, just at the European Open. You have to read the volume also in relation to the session in which it is created, as it were. So that's quite a big down bar, not a huge amount of volume. Moved lower, moved to the top of this low volume node on the volume point of control. Then we had some buying coming in. We can see this from this candle here. Again, volume is the same under here. So really, what does that tell us? Well, not an awful lot. This is the hourly chart. So within this candle and within this candle, certainly if you were on the faster time frames, there would have possibly been an opportunity for you there. But it really, once it gets into the London Open, it then moves higher, hits the resistance that we have. This is the price-based resistance, doesn't get back to the volume point of control, and then actually begins to sell off over the rest of the London session. And really, just before we come to, it was just after the US Open we've got here, which is 1500, which is 3 o'clock in the afternoon. We have this candle, we have the move lower. Again, this support here in this region, it actually coincides with an important price region on the Camarilla indicator. And then you have the up candle, and you have this bullish engulfing candle. This is a very, very strong candle pattern where the price moves lower, then the second candle totally engulfs the previous candle. There's a lot of volume underneath there, and so it moves higher. By that time, we come to 9 o'clock. We come to the end of the US session. We know things are quietening down. There's not a lot of participation. It kind of drifts lower, moves sideways, but as you can see here, the volume dies down as you would expect. And then it's into the US session as we wait for the RBA. And of course, all the good news that's in the market at the moment about the PMI has certainly given the Aussie dollar a nice big boost. Now, this is on the hourly chart, and obviously, again, it's patience, and if this is your time frame, you would just have to wait for these signals to play out. But these signals here simply repeat. They do repeat on every single time frame. This happens to be the hourly chart, but you will see this on a minute chart. You will see it even on a second chart. This is what volume price analysis will do for you. You will see these signals, you will look at the volume. It takes away the kind of emotion that that can be triggered, particularly in fast and furious moves. The candle patterns, they will help you set up, they will point to the trading opportunities. How you take those trading opportunities, we've discussed this before in webinars. I'm looking at one chart. This is the hourly chart because I particularly wanted to show this, how a currency pair you can have a shift of sentiment in a currency pair from one session to the other, and you have to be aware of this. But what it also highlights is this bullish engulfing on the 60-minute chart here. You would have a faster time frame and possibly a slower one on the other side, and how you would pick that up on a faster time frame is you would see maybe a hammer on a faster time frame. And do you go off a hammer? Do you take a trade off a hammer on one time frame, or do you wait for maybe some kind of validation on a slightly slower time frame? Really comes down to you. It comes down to how aggressive you are as a trader. And in fact, I had a trader email me send me a message on Twitter. He sent me a little section of a couple of trades that he's taken. One trade was off a shooting star, and it had been successful, and he was really pleased about this. A shooting star is a very strong signal on a chart, but as the move had as the waterfall had progressed, he had then reversed and gone long on what he thought was a hammer, but it wasn't a hammer. It was certainly a candle where the down candle, there was a wick to the bottom of the candle, and a buying had come in, but it wasn't a hammer. The price hadn't gone back to the almost the open of the candle, and he couldn't understand why he was stopped out. And I said, look, the first signal you took, it's the shooting star, is a very, very strong signal, and with a lot of volume. And in fact, if we have a look at cable's a good example of this on the daily chart of cable. Very quickly. Hit the right one. There we are. Yes, and cable is a perfect example of this. Right, this was Friday's candle for cable. So we had a shooting star with a decent amount of volume. So come Monday, what is our expectation? Well, our expectation that it is actually going to go lower. It did go lower, but in fact, because of the dollar in that was a down candle until the US session, and in fact the dollar then started to sell off. So in this candle here, a cable, very much like the Aussie dollar, it was trading to one side and then trading to the other. And I will just say about the British pound, it was something I picked up on Forex Live, which is a great site, by the way. Adam there said, oh, August, he talks about seasonality a lot, and he says, yeah, the British pound August hasn't always been a good, it's been a time when people sell cable. Now you looked at that candle on Friday, you think, oh great, it's going to be time to sell. And you look at the move that cable has had. You look at the number, it's just all up candles here, and you think, oh right, well it's probably it's had 1, 2, 3, 4, 5, 6, 7, 8. Oh, it's time for a sell. Well, yes, possibly was time for a sell. But look what happened yesterday. It did sell, but then the buying came in again, primarily, as I said, driven on this occasion by the US dollar. So seasonality is very interesting. Candles and candle patterns, certainly when you have these strong signals such as shooting stars and hammers, by all means, pay attention to them, but just ultimately you have to trade what you see on the chart. And certainly in forex, be aware that what happens in one session may not carry through to the second, to another session. This is the beauty of this market. It is 24 hours, but it presents all sorts of trading opportunities to the long side and the short side.